Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Equities is one thing, guys, but gold and silver. I mean, it's one of those absolutely historic moves. Never seen, at least I've not seen this in the last 25 years. I don't think anyone has seen this because gold was $1,000 in 2008. So I guess no one has seen it. And we're at $5,500.
It's a gold rush, and just the pace of the rally has taken everyone by surprise. So many experts said, well, after a 70% rally last year, it's hard for gold, silver to continue to rally, but it's unprecedented, the kind of a record rally that we've seen, shattered everything that people were expecting.
And the point that Prashant made, $1,000, it took a few thousand years, I believe, to get to that $1,000 in 2008. And the last $1,000 came in around 28 trading sessions. What a run. I hope you have enough, Rima.
You were smiling without an answer.
Yes.
Yes, right? So when management
I thought it was expensive last year only.
Okay, let's take it from the top, right? And I just want to start with precious metals in terms of the setup this morning, because I think that is the big story, really. And, many who've been, and I think for a lot of us, in terms of the gold that we own at homes and household gold is different. But generally, people have been, in a way, equity obsessed, right? And that is absolutely true. And it's a generic remark, but I think I'm not very much off the mark over the last couple of years with equities which have done very well. I mean, it's been super, right? But this run is quite absolutely a stunning move. So prices up 8%, 6%, beg your pardon. So we're at about $5,500, and we're up 30% in 2026 so far. And not just YTD is not even a month so far, right? Silver prices 4% higher, 118 levels. We're up 66% in 2026 so far. Not even a month. So this is more than historic, I think, fair to say. And the big theme, of course, is currency debasement. I mean, fears of currency debasement. The big rupture, of course, was, when Russia's $300 billion in gold was seized in 2022 after the war started. And I think, things have only accelerated in that sense. Central bank buying, competing for gold. They're price agnostic buyers, it seems. They don't really care about the price because they want reserve diversification. So that's what's going on. I mean, just a table which shows you what has happened, right? And this is just, $500 moves on gold prices. Just look at that. And I'm not even going back very much. So 3,000. Just look at the pace at which 3,500 to 4,000 took 118 days. And the next 500 took 56, the next 500 took 14, and the latest 5,000 to 5,500 has taken 2 sessions. So, I mean, I think that is pretty much the definition of a absolutely, red-hot market, maybe a little bit of FOMO thrown in, but there is underlying demand which has really gripped the street and, I guess, central banks more than anything else. Now, just to move forward, equities are not being left far behind. S&P hit 7,000 for the first time yesterday. They pulled back towards the end, so absolutely flattened the S&P by close. Nasdaq was up a little bit. Fed, of course, has kept rates unchanged. It was supposed to be an uneventful meeting. It's turned out to be that way. And, of course, there were big earnings which were coming through. Microsoft, etc., reported post-market hours. Fed Chair Powell sounded modestly hawkish in his press conference. He basically said that we'll have to decide meeting by meeting, and the economy is starting out, the U.S. economy is starting out in pretty good shape in 2026. We have numbers now from Microsoft, Meta, and Tesla. We'll talk about this later. Apple reports later today. And I guess after hours move in some of these names is large, 5-6%. Oil prices at a 4-month high. We are almost knocking about $69 on Brent. President Trump is urging Iran to negotiate a nuclear deal. I mean, essentially stopping its nuclear program. There's this lot of talk that US has intervened to stop this runaway move in the yen. Scott Bessent, the US Treasury Secretary, has said that absolutely not intervening in forex markets to sell dollars against the yen. By the way, the yen, after his comments, fell for the first time in 3 days. I'll just come to India and tie in the levels. But before that, fundamentally, just a story we put out yesterday from Delhi. Sources telling CNBC TV 18 that we are close to seeing the trade deal with the US coming to fruition, and there is significant progress which has been made. A little bit about the EU deal as well, that, one is not at the expense of the other. Both are important and the like, and we'll address this in greater detail as we go along. But, people have kind of sort of given up on this. But this is good to know that this is very much in the works, on the table, and that's what we picked up. Nifty is up 300 points in the last 2 trading sessions. When we came in on Tuesday morning, that was basically the big directional kind of call that the market's heavily short. There's 4 days to the budget, and people will cover. And I think that covering has happened. Will more happen? And I think the test for that is the upside level, which is 25,440. It's about 100 points, 90 points away from where we closed yesterday. And, basically that's the upper end of this falling channel, steep falling channel on the Nifty. If you take that level out, I think perhaps there is more. But that's the first kind of resistance right in front of us. The Bank Nifty is crept back above the 20-day moving average of 59,550 as well. I'll just leave you with just this one last frenzy move. Defense stocks, right? The defense index is up 8% in 2 days. And the reason is simple, that I guess there is, with the world we are in, expectations are that defense spending and capital expenditure on defense will go up substantially in this budget. But remember, stocks are not cheap. They are cheaper, but they're not cheap. So be mindful of that. GIFT Nifty will give you a quick sense of how we're likely to start, and then we'll pick it up from there. It's about 85 points lower. Nigel has walked across with the F&O positioning and the data. Nigel, over to you.
Well, the big talking point of the last 12 months or so has been the way the FIs have been underweight on the Indian markets. And the last couple of trading sessions, Nimesh has been telling us that there was a sovereign fund that was selling. That selling is coming to an end, which was good news. And maybe, in fact, could be a bit of a turn with regard to the FI buying, because yesterday, for the first time since January 2nd, the FIs, well, they turned buyers. Was it a flash in the pan, or are they back? Well, in the next few trading sessions, we'll know. But good to see them at least not sell. A measly 480 crores odd. We'll take that. Don't be sellers, but at least, don't be big buyers, but at least don't be sellers. I think that's the cue that's coming in. What do they do in index futures? Well, after the kind of move that we saw, you'll be wondering whether they covered some shorts. They didn't cover shorts, but they added close to around 2 long positions for every 1 short position. That's encouraging in itself in a market where the FI short positions are at around 87% or thereabouts. So they continue to remain aggressively net short at more than 1.75 lakh contracts on the short side. What about on stock futures? Well, they added more short positions than long positions. That could be an arbitrage out there. They bought in cash, maybe some shorts being added in the futures market as well. The PCR, well, that had come down to around 0.6, 0.65. That's moved closer to around the 1 mark. So that's more or less in the middle territory. Options data comes up for you in the screen. And in case we get a blockbuster budget, maybe the FI buying is back, and then you have some short covering as well. There is some out-of-the-money call buying. In case you get that call right, there is some buying at around the 26,000 call. Premium at around 30 rupees. All you lose is around 30 rupees. If, in fact, you're going to be seeing a big bazooka rally in the next few trading sessions. So that was some action. Otherwise, there was more or less writing. The 25,400 call, 25,000 put as well. There was writing that we're seeing at both these 2 levels. So just punching in those options premiums, you get the levels that I'm looking at. Support, we have gone numerous times around 24,900. And from there, you've seen some kind of buying. So that becomes the important mark to hold on to. You don't want that to break, because that level has got protected numerous times. And the options data as well is suggesting that's the support level that you don't want to break. On the upside, though, 25,500, that's going to be a crucial resistance. The bears would say that, they were on top all of the January series, and they'll want to protect this mark. So that's close to around 150 points away from current levels. We'll keep an eye out on that. The Nifty Bank will have to lead the way, and that's been the one that bounces back even more strong than we saw prior to this. So the recent low of around that 58,100, that becomes important, and the 100 EMA in the vicinity of around that 57,850. That's the important mark that you're looking at. But let's wind this down with the gold prices. Gold, as Prashant said, 35,000 tons of gold is what Indian households are sitting on. I'll tell you what, at current prices, is worth 550 trillion rupees which is more than the entire BSE listed market capitalization as well. Gold is glittering.
Glittering and how? Thank you very much.
It's glittering that we have many dark glasses. I think we should come
blinding.
But you know, another data point, if you could look at the household gold and you compare it with stock markets, in India, as I said, it's more than 100% right now. But in most developed economies, it's in that vicinity of 25 to around 40% at most, Italy and other economies. So, we are a beneficiary. The wealth effect could be felt.
And I mean, think about it, right? I mean, think about companies like Muthoot. I mean, there's so many ways to this, but wealth effect is absolutely strong. But Muthoot's LTV can go, I mean, how does it happen? I think it can go from 60% to 50% in 2 days, right? I mean, just crazy, absolutely crazy. So,
there's one more data point. Someone said that since Trump's inauguration, gold is up 90%. Yeah. And we've got 3 more years of Trump to navigate through geopolitics and what happens with dollar. So that also needs to watch. The question is gold in a bubble territory, or is it in the midst of a secular run, which can last for 3 years? But the other big story globally was the US Federal Reserve held interest rates steady for the first time since July. So after 3 consecutive rate cuts in the last FOMC on expected lines, there was no movement on rates. But 2 governors dissented. One of them was Stephen Moran, whose term ends on Saturday, and the other one was Christopher Waller, who is one of the nominees for the next Fed chair. They voted for a 25 basis points rate cut. So 10-2 was the final vote. Fed Chair Powell said the decisions are made based on what is best for the wide public rather than trying to benefit one group or another. Listen in.
While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. If people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.